Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look at the euro currency again. So as we have said in update on Friday, this probably will be mixed session because of the holiday from the one side. From another side is release of important statistics and non-farm payrolls release. As you know, non-farm numbers was actually very good. So near the million of the new jobs have been created in March. Also, this was some revision to the upside of the previous months. So in general, it's very positive results. And today we also have prepared the fundamental research, which is, we think, interesting, as it sheds some light on the medium-term perspective of the Forex market, what could happen within the few months and when, theoretically, the Fed policy could start to change. So, in two words speaking, currently it's really a big difference in the background between the United States and the European Union. And here is mostly the deal not with the economy performance by itself. It's obviously that the recovery in the United States comes much faster than in Europe, but mostly in the problems with vaccination. And that makes pressure on the sentiment of the investors. Seems that Europe will lag to United States in the recovery. And that's the major factor currently in pricing of the euro in relation to the United States dollar. It means that in nearest time, we keep our view the same. Probably we need to unlock our weekly scenario with the bearish pattern. That's actually what we already talked about. This is head and shoulders on the weekly chart, and currently our trading plan suggests drop to the 116 area, where we intend to keep an eye on the possible long positions, since 116 supposedly should be the neckline, and market should start to form the right arm, where the pullback could be for the 2-3 points, maybe to the 118, 119, where the top of the right arm should stand. But in the longer term, as overall context holds bearish for the euro, we see more extended downside retracement, especially as the risk of the taper tantrum in the United States is growing. So currently, if you will take a look at the dry statistics, you will see, and expectations of the analysis of the economists, you will see that within the 2-3 months, market expects the same pace of the growth in the employment by the fundamental reasons. Absolute reasons in the United States, just as a lot of different spheres start to hire employment much faster, and that's just should be some employment boom in the United States in the nearest time. So, and this expectation makes investors suggest that the taper tantrum could come in the United States within the 3-4 months. At least the first change in the Fed rhetoric could appear. That in turn should support the United States dollar and could trigger another significant extension leg to the downside in the euro. So it seems that on the euro, downside retracement could be significantly deeper than it was suggested initially. So that's what about the longer term view. In the shorter term, we'll keep our journey with the downside action. Let's take a look at on Friday we've got bearish grabber that was suggested. But the problem is that it's a bit tricky pattern because of the thin market. So from the one point of view, this pattern suggests downside action taken out of these lows, and which simultaneously means action to the 116 area. It's complete the XOP. At the same time, bullish momentum on the intraday charts, on the 4-hour time frame chart, on hourly charts stands rather strong. And actually, we still have valid morning stop action that we discussed on Friday. That's why I wouldn't be hurry up with the taking the short position immediately on Monday. Besides, on Monday it will be the holiday in the European Union, as you know. It will be the Easter Monday. So again, market will be thin, at least on the European session. So my suggestion, it would be better to wait 1-2 sessions to see what will happen. And in particular, we could keep an eye on few moments on the intraday charts. First of all, if we'll take a look at the 4 time frame chart and ask you whether euro currency has lost all chances to see more extended upward retracement, I would think that you tell that absolutely not. So euro currency here, based on the price action that we have, definitely has chances to proceed higher, to complete kind of the obesity pattern and to reach maybe 1850 area, to confidence resistance. Because take a look, this overall reaction on the non-farms was relatively small, despite the very good numbers. It just means that the overall bullish sentiment on the intraday charts stands relatively strong. Trend stands bullish here, and chances on appearing, for example, bullish grabber exist. So market stands still shows just minus 30% retracement here, and definitely chance exists in upward action. That's the reason why I wouldn't be hurry with the taking the short position based on the daily pattern, because it might be just a result of the thin market, and the result of the holidays, and weak reaction on non-farm payrolls release. From that standpoint, on the hourly chart, we could recall our analysis that we have prepared on Friday. So if you remember, we suggested that market probably should hit XLP target, forming the neckline, then show the pullback, and then extension could follow. Mostly, this setup currently is still valid, so it has not been erased totally. But since we still have already bearish grabber on the daily, I would think that we need to keep an eye on this level. 1740, it might be used as an indicator. Once market stands above this level, it means that it has chance to proceed higher. And in that environment, it would be better to not take the short position based just on the grabber that we have on the daily. But if within the Monday, maybe Monday, Tuesday, market starts dropping right back down, dropping below the 1740, and erasing this pattern, it will be the clear breaking of the harmony of the pattern that we have, ignoring the XOP target and dropping back to the lows. That will be important bearish signal. And in that situation, it is possible to consider taking the short position because it significantly increases the chance of the downside breakout. So that's the trading plan that I think might be useful within the first couple of sessions in the next week.